All right, hi. This is an introduction to plaintext accounting using a basic human-readable plaintext format and a very powerful tool called Ledger and its entire ecosystem. First, a couple of housekeeping items. Of course, I have to give this obligatory statement, even though my talk isn't really directly related to my area of work, and I have to say it too. My words are my own and not that of my employers, past, present, or future, nor representative of any project of any nature mentioned herein. Second, please hold all of your questions until the end of the presentation. Lastly, if you can't read this bottom line, you're going to have some difficulties reading some of the text on the slides. This is a very text-heavy presentation, so please do feel free to move up. So where were we? Plaintext accounting, yes. I'm Colin Dean. I'm Director of Software Engineering at a company called Arcadia Healthcare Solutions, and I've been involved with the operation of Pittsburgh's code and supply software community since its inception. I've attended Ohio Linuxfest yearly from 2007 to about 2014. This is my first year back since, and I'm really happy to be here. I was first introduced to this system of accounting through time tracking, interestingly enough. Time tracking is an alternative mode present in the original Ledger program. I needed a time tracking program to augment a system at my consulting job that just was fraught with bad UX, but we really needed really precise timing and information so we could bill our clients like to the minute, basically. Also, as Bitcoin grew and grew in popularity, and I started trading and whatnot, I quickly adopted Ledger for tracking my own cryptocurrency activity. Kind of got away from it whenever I stopped doing active day trading with it. Last year, I started using Ledger for tracking my own pay time off, using a commodity, which I'll get into later. I set up a system where my workstation would email me a weekly digest of my PTO so that I'd be inspired to take more PTO. Unfortunately, that wasn't really enough because I barely took any PTO in 2016. It was really nice, though, to have that email and have that kind of reminder of where I wasn't taking my vacation. This year, I did commit to using plaintext accounting for my own finances instead of the spreadsheet format that I came up with about 10 years ago and that I've been maintaining lackadaisically ever since. I also just started using Ledger for the Code and Supply Scholarship Fund's finances, a separate 501c3 nonprofit that I help run, so that I could benefit from the same technologies that I was building from scratch there, but could also build from scratch to my own, use the same stuff. So these are some of the things that I'll be covering during the presentation. First, why accounting? We'll go over a brief on double entry accounting for people who have no idea what accounting really is. We'll talk about why Ledger specifically, some of the Ledger format and the things that makes it as a powerful platform, and then some tricks. Everybody else, tricks. So first, of course, is the rhetorical question, why do accounting for your personal finances and such? You want to know what you have. You ought to know how much money you have at your disposal at any given time. What you have is a combination of the money that you can access easily, such as what's in your wallet or your bank accounts, and what money others owe you, for example, short-term loans and reimbursements, plus what money you owe others, which is generally a negative amount. For example, a credit card, a mortgage, or a vehicle loan, or student loans. Tracking your income and expenses allows you to know what you have across all of your accounts, to know what you had at some point in the past, to know what you are owed and what you owe, and most importantly, to know what you can spend at any given time. Moreover, if you run a business, you're probably legally required to keep records of some sort. This is called bookkeeping, and if you make enough money, you probably are paying somebody to do it for you. And you probably should pay somebody to do it for you so you can focus on your business. Lest you wind up penniless when you think you have more than you do. How many of you actually recognize this character? Does anybody know his name? I had to look it up. His name is actually Rich Uncle Pennybags. We all know him from Monopoly and other Parker Brothers games. But hey, Rich Uncle Pennybags. He'll show up in this presentation a good bit. Let's talk some terminology. Do we have any accountants in the room? Yes, great. Please bear with me on terminology. I'm a student of many disciplines. Accounting is just one of them. I've been keeping books now for my organizations for about 15 years, but I do still trip up sometimes with terminology. So the first thing is an account. This can be your wallet, bank account, your credit card, investments, other things like that. There are 5 common categories of accounts. First of all is assets. These include things like your bank accounts, your wallet, your investments, and loans that you've credited to others, or loans that you've given to others. There's income. This includes things like your paychecks and your gifts received and dividends and interest. Now we'll go into things that are generally outflows. Expenses like groceries and taxes and gifts that you've given and donations. Last of these 4 major ones is liabilities. So these include things like your mortgage, your credit cards, your student loans, and any loans that you've owed to others. I'll let her take a picture. And then for everything else, there's equity. Equity is commonly used as a catch-all, at least I use it as catch-all, is most often used to capture things like opening balances, but also serves as a bin for rewards, cash back, things like that, as well as unbalanceable accounts, such as when you're just kind of throwing your arms up in the air when you're balancing your checkbook because you have no idea where that 1 penny is and you'd rather go drink a beer. Credits are things added to an account, while debits are things removed from an account. Associating credits and debits with accounts begets a transaction, commonly with some kind of a timestamp indicating when the transaction occurred or when it was posted, finalized, and some kind of description of the transaction. One transaction contains credits, which increase the value of an account, and debits, which decrease the value of an account. Most transactions debit one account and credit the other, but they can include multiple credits and multiple debits if you've got multiple ins and outs for a single transaction. All transactions must balance. This means that the sum of the debits and the credits must be equal to 0. If you take $100 from one collection of accounts, you must add $100 to another collection of accounts in order for the transaction to be valid and balanced. The number of debits and credits need not be equal either. If a bunch of people, say roommates, were to give you money that you are owed all at once, you might record it as just one transaction whenever you take it to the bank. And you can see an example there where 3 people have given you money and you've put some in the bank and then kept some cash for yourself. No double entry accounting program will allow an unbalanced transaction. Double entry accounting itself does not allow unbalanced transactions. Let's talk about some programs. First of all, QuickBooks. QuickBooks is probably the most widely used accounting program. It's got basically everything you need for running a business built right into it. It's also pretty expensive, it's proprietary, but it runs everywhere. It runs on desktops, smartphones, the web, whatever. Mint, another Intuit product, automates the collection of transactions, but relies a lot on manual curation of the payees and the data that comes in. It's really great to get warnings and get some really quick graphs if you're just wanting a really high-level view. I've used it since about 2009, mostly for those, but I stopped trying to fix everything in 2013 because it just wasn't worth my time. I'm spending far much time trying to match transfers from accounts. It just didn't work that great for me. I do still use it for large transaction notifications, although now almost every credit card company and bank that I have has their own large transaction notifications that get to me faster than Mint's does. Mint's usually a day or two behind. You need a budget, commonly referred to as YNAB, is another tool aimed at the personal finance market. It focuses on budgeting, not on necessarily bookkeeping. It's pretty batteries included with a focus on building good budgeting habits rather than just tracking transactions. YNAB is now subscription-based. It used to be a purchased software. It's now subscription-based web and mobile app. It's a pretty good option for people who are just trying to learn budgeting. I would be remiss to omit open source tools such as KMyMoney and GNU Cash. These are both, of course, free, and there's a mobile version of GNU Cash that I just found out about a couple months ago. GNU Cash was actually my introduction to double entry accounting, but I gave up on it when I readopted macOS in about 2009. And I went back to spreadsheets because that's what I was comfortable from. I had only really been using GNU Cash for about 6 months at that point. Then, finally, there's Ledger, the whole reason why we're here. Ledger is itself command line only, but the ecosystem that is developed around this one tool and the derivatives that it has inspired can allow a variety of modalities, a variety of devices you can use it on. However, the core goal will always be, of Ledger itself, to be a solid command line experience. And of course, it'll always be free. This is a screenshot of the Wikipedia page documenting accounting tools. There's a lot of other open source software out there that can do this. This is the list of all of the open source tools. But most of these tools are oriented towards running a business on open source. Ledger follows the Unix philosophy. It does one thing and it does it well. Well, technically two things, because it does have a time tracking mode, but really the time tracking mode is simply a currency in its system. So why do we want to use Ledger? Why should you use Ledger? By entering each transaction manually, you can spend that money again, and more than just at the time that you hand over your cash or you insert your chip card incorrectly the first time, or you click complete order or buy it now. If you really, really hate the manual entry of data, for what me is about 5 minutes per night on a normal day, lots of folks have automated extraction and transformation from bank and Quicken formats. I really don't like it though. Everything in Ledger is just a commodity. A number gives the commodity an account, or an amount rather. Accounts can contain multiple commodities. This means you can use Ledger to track inventory for your business. I wouldn't recommend it. It's not necessarily meant for that, but you can do it. And you can do it with any size business too, from like a banana stand or something to a multinational corporation. Ledger is just text and a program that reads that text to produce reports. It's fast, incredibly fast. It uses very, very little memory, and it doesn't stay loaded in RAM. It's not like a desktop application that's there and occupying 500 megabytes of RAM because it's an Electron app. The records are about as raw as they can get. So if your accountant or your IRS agents need them, you can just give them a text file and say, here's everything. Go do whatever with it. You don't have a need to go dig up Book Cooker 1997 or some other obscure program you bought for $10 20 years ago, and you still run it in a VM because this is where all of your records have been. One of the dangers of proprietary software, I guess. The text format has some very simple rules. So it's very easy to parse, very easy to write a parser from scratch for it, and more importantly, really easy to construct. I've built a few scripts that construct Ledger records based on other outputs. That's just what one of those translators I talked about is. Being simply human readable text, the format really lends itself to versioning as well. So you can use Git or Bazaar or something to store, track, collaborate, and audit your transaction just like they were code. This ecosystem really lends itself towards automation, so you can use common tools like Make to automate your build process. Only your build process, instead of building a program, is building like a financial report. Let's talk about ledger format. So a transaction in Ledger has these parts. There's a timestamp, a payee, a series of accounts with debits and credits, and optionally some comments. Comments can be on a transaction or they can be on individual lines in the statement. Here's an example of a simple transaction. So let's walk through this. Here's the date. It's always in ISO 8601 format. Year followed by month and date. No weirdness between US and European formats, or US and everybody else. Ledger and some others allow slashes instead of dashes. I prefer dashes. This is the payee. I like Commonplace Coffee. They're a coffee shop in Squirrel Hill in Pittsburgh. They've got the best cold brew in Pittsburgh. I make lots of cold brew references throughout this because I was in a coffee shop when I was making it. The payee can also be a note about the transaction. Doesn't necessarily have to be an entity. Something like a transfer for down payment, something like that. This is the account label. Subaccounts in Ledger format are separated with colons. That way, Ledger can build a tree structure to show you where your money is at a high level. For example, you could see something that is at expenses or something that is at restaurants within expenses and see all of your restaurant's expenditure. Here, I've created a sub-account to track my coffee spending. I could also just do expenses restaurants. This was where I put my restaurant spending, even for lunch. I could do a separate one that's like expenses, restaurants, lunch. If I wanted to explicitly track how much time or how much money I'm spending just buying lunch instead of bringing lunch. This here is the amount. It's a credit because it's a positive number. Note that expenses are credited. This is because accounts must be deducted when you're spending money. I'm taking money out of my wallet and giving it to somebody else. This is another account. It's advised to separate your assets into a few different categories. Cash contains your wallet, your bank accounts, and anything else that is liquid and accessible. Investments contains money that is not liquid or illiquid. Your retirement accounts, your stock brokerage accounts, maybe some stock you got when you gave your friend some money because he wanted to create the Facebook killer or something. Reimbursements contain amounts that are owed to you, such as when you book thousands of dollars of company travel on your credit card to get the rewards points. Lastly, here's the debit for the transaction. It's negative, it's a debit. Ledger's pretty smart and lets the user omit one account's amount. This signifies to Ledger that any imbalance in the transaction should be assigned to the account that doesn't have an explicit amount. Ledger would see this transaction, know that some account needs to be debited $3 in order to balance the transaction, would then assign the remainder to that one account that has no amount specified. This is really great for creating very complex transactions where a large part of the expenditure goes into one category that you don't want to take the time to break down. So let's change it up a little bit. The next day, our hero gets another coffee, and this time she pays with a credit card instead of cash, and puts in a comment saying cold brew. The credit cards are a liability because it's money that you owe someone else. You've credited the expense and you've deducted the liability. I advise creating a sub-account for credit cards with like the name of the card, just so that you're ready for when you get another card, even if you only have one. A few days later, it's payday. Income goes into a well-named account and the credit goes into her bank account. Why is income debited? Think about it for a second. It's your employer's bank account, so their bank account must decrease as much as yours increases. The next payday, she wants to move some money from checking into savings. Very easy to express. The payee can be your own name or just simply describe the transfer. The next paycheck, though, our hero wants to kick up her tracking just a notch. She wants to track the taxes paid. To keep things uniform and save herself from figuring out the amounts just right, she probably goes back and edits the past transactions to look like this. You're using a versioning control system, you can see how things changed over time. You can go back, change things, and know, hey, I did it this way a long time ago. Now that we understand the format, let's see how Ledger is executed and how it reports important information to the user. Here's the first example. Take a look, kind of digest what's up here, and see how it comports with what you just learned. So there's a transaction establishing some opening balances. There's a single expense, coffee run, of course. There's payday, and then there's a transfer to savings, things we just talked about. If we invoke Ledger with a simple balance command, we can see the value of every account with the nested accounts broken out. We can also see a list of all of the accounts that we have in the system. This is pretty useful for checking for typos if you're not using strict mode, or strict mode where you have to define all of the accounts before you actually start using them. This also lets you be able to catch things like missed pluralizations. Maybe instead of when you typed out expenses restaurants coffee, you typed expenses restaurant coffee. This is useful for that. Payees is a similar command. It'll show you all the payees in the record. Again, it's mostly for typos. Register, this is probably the smallest text in the presentation, so if you can see this, you're good. Register outputs by default a list of every transaction with its credits and debits, plus a running balance for each account. There are some other accounts, or some other commands too, but these four, especially balance and register, are probably the most commonly used commands. This is another example of a balance command wherein taxes have been tracked as a part of that those transaction records I showed you earlier. Some ledger-likes make this view a little bit easier, putting in like tree viewing characters. I really like those, and I'm going to be actually trying to add those to Ledger in the next couple of months. Balance and register alone aren't really that useful. It's really, those are kind of the basic commands. They give you a view of everything. What you really are interested in as you are especially running a business or you're trying to understand your net worth are these things. If you deduct income from expenses, you get your cash flow. Positive cash flow in Ledger means that more money is going out than coming in. And negative cash flow means that you're saving money. You have a surplus. Having positive cash flow isn't necessarily bad, because you might have had emergency expenses or have been saving up for a really big purchase. Our example transactions show a surplus because the total is negative. Ledger uses simple regex-like syntax for selecting certain accounts. You can see the regex-like up there. Deduct liabilities from assets, and you've derived your net worth. Is it bad for this number to be negative? No. If your net worth is negative, it's not necessarily a bad thing. It just means that you owe more than what you currently have. Maybe you're paying on your student loans, mortgage, children's student loans, whatever. You're not alone. 50% of Americans in 2015 or 2014 had zero net worth. So here's what a net worth balance looks like. This person has a good bit of money. Next, let's talk about commodity management. Here are some examples of what a commodity-specific transaction can look like. Note the explicit use of USD here. I recommend using USD instead of a $sign. Ledger does allow you to put a $sign at the beginning rather than using after syntax. It's better to use this syntax because it works better with all of the tools of the ecosystem. Not every tool supports a currency symbol. I generally could prefer commodity words. The novel expression in this amount, VTI, is because that's being used as a commodity. These transactions say debit the checking account, this amount, and credit the Roth IRA account, this much at this commodity, or this much of this commodity at this price. The top transaction says how much to debit, while the lower transaction lets Ledger figure that out. We can build a price database with up to the second resolution. For tracking long-term securities, it's best to just use the market close at a single date. Note that these are not real prices for VTI. I started that, but then the swings simply weren't enough to be able to show the next couple of slides. We use a slightly different command to run our balance report now. We provide the price database file and then use the V command to instruct Ledger to resolve the current value of the commodities in the price database. We've also used the end command to say when I want the report to end instead of running it for all data. Easier way of displaying these slides. When I run it again a few days later, or a few days later end date, you can see that the value changed. That zero sum is gone because we have a gain. A few days later, we have another gain. Ooh, you got a pop. Uh-oh, starting to go down. You're not broke, it's just a market down day. Ledger is a very powerful accounting tool, and there's some advanced feature that I can't cover in our time together. These are some of them. I particularly, of all of these, have used balance assertions the most. Balance assertions are a great way to make sure that what your bank account is showing is what your ledger says that you have. And it will tell you, hey, this doesn't add up, and you can figure out what things are missing. That's when you get into that equity unknown, you're just kind of throwing your arms up. There are three other features that I want to highlight for you in about the last 20 minutes we have. You can do budgeting by declaring periodic transactions. That is transactions that execute daily, weekly, monthly, yearly, and are checked against your real transactions. Given this budget stanza at the beginning of a ledger file, it always has to be at the beginning before any other transactions. We can see how much money we have left in our budget. Notice that the assets amount at the bottom doesn't have an amount associated with it. That's because we want Ledger to figure out how much assets we need in order to satisfy our budget. Here's some example transactions for paying against that budget. Here's what remains in our budget. The important things are highlighted in red. Notice first that Ledger figured out what our assets needs to increase by monthly in order to afford our budget. Up $4,567. It's a rather round number. Notice then that the transactions didn't touch gasoline, so it's still at full budget. We used a little bit of our $30 coffee budget. And lastly, we only paid $580 of our $600 mortgage budget. Hey, sometimes you pay extra, sometimes you don't. Every little bit counts. Forecasting will apply periodic transactions representing budgeting until some condition is reached, such as your checking account balance being zero. I find Ledger's forecasting feature difficult to use, difficult to read, and I haven't really used it. Maybe if I build an advanced plain text accounting talk, I'll dig more into it and really grok it so I can teach it better. Lastly, timekeeping. This is my first introduction to Ledger, and probably the feature that I use daily the most. I kept my time in this format for about 2 years and was recently asked to resume this procedure at my new job where we're now tracking time again. Here's an example of the timekeeping syntax. Really, really simple. What this does under the hood is creates a special commodity just for time. Ledger allows you to specify units within units. So think of like you could express cents as 100 cents equals $1, and then denote your commodity to be cents instead of dollars. Or think of like Dungeons and Dragons or something where there was copper, silver, gold, and they were all kind of 10 silver was 1 gold, that kind of a thing. In that same way, we can express like, okay, here's hours. There are 60 minutes in an hour. There's 60 seconds in a minute. There's 24 hours in a day, those kinds of things. And be able to have the flexibility to show all of these units within a single account. Here's the balance for that file. Here's the balance for a format very similar to what I use in my consulting days and very similar to what I'm starting to use now. Interestingly enough, Away is a really good way of tracking your PTO if you don't want to track your PTO explicitly. It's always good to separate billable and non-billable tasks as well. Ledger technically supports these as comments, and they will show up as different accounts. Just makes it easier to read. It's all a part of the same account name, but Ledger doesn't get persnickety about account names whenever you put things in brackets. And then here's a register command on time. There's also a special time report mode that you can put on the balance command. I find it difficult to read. I don't really use it a whole lot. If you really want to get into time tracking with Ledger, please check out my GitHub profile, just Colin Dean, where my HEJMO project, HEJMO, contains my time tracking setup, complete with a script that automates a lot of the generation of the time using GNU dates relative timing features. There are a few other features too, which I consider to be pretty advanced in usage. I don't really use them that much because of it. If you want to try out Ledger, you can get it at ledger-cli.org, ledger-cli.org, and there's the docs link down there as well. It's available in every package manager in every operating system. I think you can even get it on like Entware, and you can do it on your router. Who knew you could track your finances on a router? There's more, though. Because we've talked about Ledger, we've talked about its competitors, we haven't talked yet about its ecosystem. We call this the Plaintext accounting ecosystem. Hashtag Plaintext accounting. This site is the community's hub. Here's a quick screenshot of text. It's pretty plain text accounting. Bad joke. The site curates recommendations for tools for importing transactions from banks or tools for manual entry, syntax highlighting, user interfaces, and more. It also lists some of the discussion groups that started around it. I run the Reddit one. It's small. It also has generalized guides for how to work with most of the ledger likes in the ecosystems. So you can learn some of the common tasks. You can get into reconciliation, learn budgeting in them, as well as multiple currencies and everybody's favorite taxes. Nonprofit accounting is really interesting. That's one of the things that I'm working on. Interestingly enough, the Software Freedom Conservancy is one of the primary producers of information on how to do nonprofit accounting with Ledger. They're really pioneering that field, and I'm starting to use some of their methodologies and how I'm doing Code and Supply Scholarship Fund stuff. Many have existed throughout times, but these are the ones that are in active development. There's been more than 100 ledger likes throughout history. These are the ones that are active. The ledger at the top is the one that I've been talking about today, and is what I use for my time tracking at work and what I use for Code and Supply Scholarship Funds bookkeeping. I myself tend to use Abandon because it's written in Scala, my preferred language, so I feel a little bit more comfortable reading its code whenever I encounter problems. I prefer its report formatting, but one of the things that's having me probably switching off of it sometime soon, unless they actually get around to doing it, is implementing commodity support. I want to be able to track my stocks. I want to be able to track my Bitcoins. Bean count is also worth noting. It's very popular. Unfortunately, its format diverges significantly from ledger format. Each transaction still looks the same, but there are other things that go into it that are required, such as you must declare all of your accounts. You have to use certain syntax for certain things where Ledger is not as militant about syntax in some areas. Bean count also has the best UI support. The Python community has really kind of rallied around it to build something like this. This is a tree map of my 2017 expenses as of mid-July, rendered by Fava. Fava is a web UI for Bean count. I've been using it for a few months now, and I really like the visualizations that it gives me. These tree maps are great. Abandon itself can't output ledger format reports without doing weird things to its aliases. However, it can output XML. And it's basically an XML representation of how Abandon thinks it's processing ledger. So because it's just XML, I wrote some XSL transformations that transform the Abandon XML into bean count ledger format through a few steps. It works really well. Make Fava, and suddenly I've got a web browser open that has this. This is the exact same data expressed as a sunburst graph. Whole lot easier to see, like, oh hey, I'm spending a lot of money on pets. That's somewhere over here. This over here, huge thing, that's taxes. So here's some takeaways. Accounting informs us of how much we have. Bookkeeping is the practice of tracking these transactions. Double entry accounting requires balanced transactions. There are many tools. Some are paid, some are free. Each have different strengths and weaknesses. Ledger is probably the most well-known plaintext accounting tool. There's a whole system and community around it. IRC, Reddit, Gitter, anything you can think of, there's a community talking about Ledger. Text lends itself to easier management, especially for we technology types who like using version control systems. Manual entry may seem tedious, but it enables really intimate knowledge of your finances. If you feel like you're spending too much money, you should do this. Whether or not you're using Ledger or YNAB or another tool, this will help you spend less money because you will be much more aware of the money that you're spending. Lastly, Ledger enables you to use the command line tools you're already familiar with. I grep my logs frequently. I can cut them, I can reformat them with awk, do anything I want with the tools that I'm already familiar using with, that I use just to code. Is Ledger the best? I don't know. It works great for me and the organizations whose finances I manage. My recommendation, though, you want to use the best tool for you. Don't be afraid to explore around. Try a few different tools. Try some proprietary ones. Try some free ones. I've always come back to Ledger, and I bet you will probably come back to Ledger too. So, go forth and save. Of course, some attributions. You can find me online, Colin Dean, and of course, got to throw the dog tax in there. This is current. She's cute. Lastly, last slide. Here's some places to get some information if you want to take a picture or something of this. Plaintext accounting is the subreddit that I started. If you go to Ledger subreddit, you'll get a mix of discussion about this topic as well as Ledger, the hardware Bitcoin wallet. It's frustrating. Ledger Tips is a great Twitter account to follow. Pretty much anything that I tweet regarding to Twitter, they retweet, or regarding Ledger, they retweet. This is the primary IRC chat. The gentleman who is the original author of Ledger hangs out there, as well as the authors of all of the Ledger likes hang out in there. You can ask a question about anything and get information about how to do it in any Ledger like. Lastly, if you want to see these slides, there's a link down there. I still have a little bit of time. I'm a little bit ahead, so I guess I can take some questions. Yes, sir.
So in an environment, so you end with saying choose the best tool for you, but also talking about doing nonprofit accounting,
Mhm.
which you may need to work with other people who are doing this. How do you address that in terms of tool choice? Specifically, I can think, well, taking things back and forth from ledger into, say, new cash might be one way of addressing different preferences for tools and tool types.
Yes. The tool type preferences are going to change so wildly between auditors and accountants. If you get up to a level that you're required to audit to have your finances audited, you might be getting to the point that you're better off hiring an accountant to track all of this. So you might close the books on 1 year and say, okay, the next year we're going to pay an accountant to do this. It's now their problem. You might have your entire setup and be able to teach them how to use this tool so that you're still able to interact with your finances. There's also some converters that folks have written that will handle how to export to Quicken or QuickBooks or do it as a spreadsheet. Almost everything comes down to export as a spreadsheet and let somebody who's a pro with Quicken import it that way. Good.
What font did you use?
Input Sans for most of this.
What was it?
Input Sans. It's a code editing font that I've started to use just about everywhere, and it looked really cool for this slide, so I went with it. It's got ligatures too. Anything else? Okay, cool. Thank you very much for coming.